Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Okay, welcome, Auborians. Today, the 8th of June, 2020. My name is Steve Vetterl. I am the firm CMA, Chief Market Analyst. Sounds like a big old title, right? But essentially, I'm just your risk manager here, trying to bring you guys some expertise from the northern San Diego region called Temecula. Small wine country here. Me a favor if you guys would, please. We're looking at the Forex Factory calendar. I want to make sure. I was having some technical difficulties getting logged in here this morning. Can you guys see my screen? Can you hear me okay? How's the mic sound? Screen viewing okay. Guys, the chat window is open. The Q&A window is open as well. Please put the questions in the Q&A window if you want me to look at anything or you got any questions on anything related to this. Do keep in mind, it's been a little quieter in Forex land. I guess arguably depending on the pair that your systems and or yourself are trading. But I always like to take a look at just the big picture of what's going on. So let's start. We'll jump back to the calendar here, but I'm going to take just a quick peek at a lot of markets, including DAX, S&P, coming near some highs. You know, we've seen them sort of touching and peaking above high levels as far as equities. No surprise, we've talked exhaustively about that. Same thing with energy for the most part, everything from gas to oil, people getting back in gear, nat gas, gold, silver rallying on the weakness of the dollar, metals generally in the gold and silver category mostly higher, copper pulling back a little bit, about a 5% correction off the top in copper. Keep in mind, copper, as we often call it, Dr. Copper, is a great indication of the underlying health of the marketplace, right? Now, this shouldn't surprise anybody why we've seen this. The global shortage in semiconductors has really led to a big fat rally in copper from hell. I mean, I think things more than doubled in just the last year. Surprisingly enough, it's a pretty decent copper ETF we were in to rode that up. We sold most of it looking out. So let's go back to the charts down into currency land. If you're wondering what this website is, I'm just going to put the futures link in, switch it to daily, then switch to charts. I'm going to drop this link in the room. I know a few of you have asked for this on more than a few occasions. So I'll put this in the chat room right now. There we go. It's a good dashboard. Keep it on your phone. You can look at it in a variety of different things, quotes. But I always try to go to the bottom, just to look at to see what's going on in currencies. Note any of the bond movements as far as U.S. Treasuries or notes, bonds, and see the performance, anything going crazy, right? Just looking at these, double check my math here. On a daily chart, starting off with, dollar's been down in the region we've talked about. Euro's obviously the exact opposite of that. Yen's been generally weaker. Pound's been generally stronger versus the dollar. Many other currencies for that matter. Japan on the weak side of many other currencies. Canadian strong, certainly Swissy strong, Aussie mixed, same thing. It's interesting how much these charts look similar, Aussie and NZD. So you can go into more depth on the comparisons of these majors versus the minors, but I like to see just a broad picture of what's going on to begin with. This is the week, June 6th through the 12th. So haven't really had anything going on. Obviously, a lot of holiday-based stuff, lower trading volumes. Many of the big players globally, especially since the pandemic is lifted or lifting, depending on your region of the world, wanting to get out and not do stuff in the house. So I think trading volumes are going to be lower just because of that, which is almost like a self-fulfilling prophecy. So BOC is tomorrow, and it's just a general rate statement. as far as the BOC, which is Bank of Canada, by the way, BOE, Bank of England. So if you could just remember, there's different central banks around the world. About 6 to 7 major ones control monetary and inflationary measures globally. Important to know when they speak. You can always click on the file to see a little bit of more in-depth information on them. Do keep in mind that this week, both Canada and England, not only statements, but governors speaking. That's on Friday. Do keep in mind also these times can differ depending upon your area. This is just the Pacific time zone you're seeing here, which essentially is about 12 after 10 a.m. here Pacific time. So do note you can always sync that by just going in and syncing. So that's kind of all I wanted to say on broad picture and calendar. Let's take a look at the marketplace. As I mentioned, equities in a high. Moving to the dollar, just on a daily chart here. This is tradingview.com. It's actually really good software. I've had a couple of requests from different stuff. I'm also going to take a look at crypto in general as well via Bitcoin. So let's dive on in. So as I've talked a lot about over the last few quarters, we've been expecting the dollar, which has been essentially in a very broad decline since, oh hell, a year, right? A little more than a year and 2 months, right? Been in a broad decline. We expected it to rally a bit. This is typically what they call a head fake or a dead cat bounce from the standpoint of a daily chart, and then to resume the downtrend. Notice that we've come into a fair amount of resistance here. I actually thought, and maybe I've been partially wrong in the discussion of this, I actually expected we'd go back down and test this there, and I've talked a lot about that, but didn't think we'd hang around here this much, okay? So it's a little bit of an interesting dichotomy that's developed in the dollar. If you take a look at it on a weekly chart, you can see same strength-based zones, but if you take a broader or essentially zoom in on the chart, you can see that, you know, essentially the cliff, if you will, is everywhere from the 850 area all the way down to the 8850 area. So essentially we got almost a full dollar of pretty serious support to get through. And then I think it's a complete sail down to this 86 to 85 zone that I've talked a lot about. So no surprise there. Obviously, the key thing in these discussions is, well, what does that mean for my software, Steve? The point is really very simply, it's if we break these zones decisively and or come back up to test them, so breaking support on the downside, coming back up to test against that, and there's that sort of support or resistance line. You know, once you crack through support to the downside, it now becomes resistance. So if we were to trade up against that line again, and then start to sell off, there's absolutely no way, at least for a few days, that I would be accepting any long trades attempting to step in front of the freight train down near the bottom of this. This goes for every single instrument I will ever show you guys. I don't care if it's crypto. I don't care if it's anything related to commodities, certainly the currency markets we talk mostly about, equities, anything in bond markets. The same applies in terms of risk management and technical analysis. Those initial moves, as I've shown these examples ad nauseum and in many different stuff, especially that Japanese yen I've talked a lot about. When it breaks that, it just has a tendency what's called make a zipper move into the next area. Don't want to be stepping in front of that. Rather be riding the caboose, right, or the coattails of that type of move. So with that being said, let's move into Euro US dollar. This is, from a daily chart standpoint, almost the exact opposite of what we're talking about in the DXY generally. You know, anything above this area up here sounded like a broken record on this, but for a lot of our newer subscribers who we've had come on board, this whole 2300 area is resistance on the top. Whereas arguably you could say resistance in a range from the 19 area all the way down to 17 in this. But if the dollar rallies a bunch, this is really the end movement I would consider for us to have a pretty protracted move down to this next area. See how we broke out from what arguably on actually, let me just move this so you guys can see this. It's one of my favorite patterns. So this is a cup with handle breakout. Okay. More important, a sloppier cup, but still, the key thing is forms a deep cup, forms a smaller handle. You know, once the breakout takes place, arguably you want to see a lot more volume coming in that we saw, but you know, this is all pandemic related, so it's kind of hard to read into it. But anytime I see a cup with handle pattern, especially if one of, and I'll show you the squeeze zone indicator here, which is one of Dassan's indicators, which has been super accurate, by the way, enough to the point where I've actually brought it in as an actual tool on my futures trading systems on my other desktop on the other side of the office. So looking at, and I'm going to be integrating these two systems here once I get my new office and everything set up in Florida. Bring it all together so I could show you guys all in one, but I don't want to blow anybody away because a lot of the IRT and investor RT stuff I use has a lot of market profile stuff on it and volume, which can be kind of confusing. So I'm just trying to stick to the basics to give you some general direction here from a macro standpoint. But a nice breakout led to, you know, zone. This is great. One of those great examples of where you can just let the software play both sides of this, right? Essentially, we're going to be auctioning beyond, you know, a breakout area, but find a zone where we're auctioning back and forth inside, and you can make money playing scalps or swings on any of this type of movement. So it's a good way to sort of let any kind of martingale software sort of play itself out. So beyond that, you just take a look at the gold chart we had a request on, because I noticed inside the arrow room we've been seeing a lot more subscribers trading gold. So this is just spot. I prefer to look at this chart. You can always look at the GLD, which is the ETF. It's almost the same thing. But the problem with spots, I don't have any volume on this, so you can sort of overlay, if you will, GLD in the different breakouts. For some reason, it doesn't look like this data is lining up right. Let's try that again. Actually, let me just go to a weekly first. I think this is, it gets rid of some of the noise in the chart here. So back to spot. Let's look at the weekly on that. Ultimately, I think this is where we're headed. No surprise, right? And the dollar started backing off, gold dropped back and consolidated for a while, and then sort of tore back up again. But just looking at the broad picture, the broad move on a monthly chart, maybe a little easier to see. There we go. So this whole 1900 area, you know, essentially has been sort of a magnet since the pullback. But ultimately, new highs are attained as we start getting up towards the 2100 area. At this point, if we can cross this summer, not sure. It's going to be dependent on a number of global factors. Obviously, the weakness in the dollar and changes in other instruments, especially the bond market. I think this is just absolutely going to sail. This will be one of those very few and rare times where I get to put what's called the golden number on a chart. It's what's called a 127 fib. You can actually use an extension for this target, but essentially a 127 fib, without getting into a lot of detail on what that is it's just projecting movements on the upside. We're probably looking close to 2,500 on gold, which would be just an absolute rip. In which case you will see me publicly talking about taking large chunks of client allocations to this off the table, because the typical client, since this whole area down around 1,300, we've been pretty heavy in gold, almost 9% of a client's allocation in this, which is pretty heavy historically, just because we figured we'd see it rip and then potentially lift up there. So that's sort of where I am. But if we go back to just a little more, it would just seem like this whole area would be our first stop, provided the dollar continues down. Now, if I'm dead wrong on this dollar assumption, which I don't think I am, but just in case I am, we will certainly see this back to some of these other support and resistance zones you see here, ultimately right around the 1700 area. I would think that we'd go back and test pretty quickly if the dollar starts rallying big. Could be wrong. So you wanted me to look, I don't really pay much attention to silver, honestly. There's a silver chart. You really want to look at something like this, in my opinion, on a weekly chart. But this is just a broad range we've been in. Every time we get up against this, along with this, exogenistic event brought a ton of volume in. Look at just completely. This tells me right now, could change, but this tells me some big institution is huge defending this 28 area because of the reversal that took place off it on what arguably was a pretty big moving event against that. Now, maybe they've lightened up their position dramatically and they won't be defending that level again, right? But the reason we took a big drop down is because of the fact this volume, and this is just the SLV, which is the iShares Trust, mimics the movement of it in terms of an ETF, trades liquid just like any stock would, pulls it back to it. This is one of the ones where I'd actually rather pay attention to silver in terms of the ETF than the spot market. But GDX is sort of an ancillary of the two because it's mostly gold miners. So you can sort of see what's going on there from a daily standpoint first. It's had a big lift and a pullback. Let's see, the other question I'm getting is the GR30, which I do not track or follow. If you guys want me to add that, I certainly can. Let's take a look here. I don't know much about this data source here. Maybe somebody can fill me in on this one. What the hell is WH self-invest? See, you always want to question, especially with TradingView, what the data source is when you're pulling something in. Obviously, if you're pulling up a stock like Goldman or something like that, and you see NYSE, you can trust it. NASDAQ, obviously, if you're pulling something up tech or bio-related, you can trust it. Actually, maybe I should just use the Ananda one. Let's try that. I'll keep this in if you guys want. We'll just move this up to indexes here. Tight consolidation, no surprise. It's exactly mimicking what's going on. I think pretty decent to the DAX. So notice this just looks real similar to the S&P chart, obviously. The big European conglomerates comprise, or the European corporations comprise this index. But from a daily chart, we're at it. And essentially, we've come up against it a couple of times now. I actually would rather, I don't have time to mess with this now, but I would rather look at this from a futures trading perspective. So it gives you a little more accurate, because the CME owns Eurex, which is the exchange this trades on as far as the futures markets. I'd rather look at the Eurex contract volume than I would this. But it'll give you somewhat of some. Essentially, it looks like it's going to break higher. As we expect the S&P to break above these levels, which kind of is peaking above today. See how these two charts look very similar, right? If this breaks decisively on volume, now notice granted it's only half the day is finished, but notice the declining volumes in terms of spiders. This is one of the most liquid contracts traded in the world, folks. It's SPY. So the SPY, the volume on this is, you can read a lot into this. So notice this volume coming in here, which is pretty big vol. Wasn't the biggest of the year, but certainly way over the average. I was telling you this is going to be defended as far as an area. And then we started bouncing up. Same thing, came back down. Bigger vol, not as big as before, but a green candle from a gap down, and they bought it. Essentially, it shows you that it's a support level. Don't have to be looking at just currency charts to see these patterns playing out. You can use them on almost any instrument. Really not about the instrument. It's about the teaching of the understanding surrounding it. And we'll get a bit off track here, but just trying to give you guys some different examples live. The more you see chart patterns, the more you begin to recognize this stuff. So GBP CAD, jump back to daily here and start off with you notice the pound has spent a lot of time up here on this daily pattern, a lot of time up here in a very tight range. So this is, in my opinion, normally what's called a coiling position or a spring tensioning position where it wants to explode out of it one way or the other. The problem with that, if this was individually stock based, you know, like Celsius is a great example. I'm drinking the shit out of this stuff because the stock's been just skyrocketing on us. It was a huge, great buy time for us. Which, by the way, for the question I got last week, came right out of one of my best database sources, and this is the IBD 50 lists printed in the USA. You got a Saturday edition, and you have a it's a digital edition of this. This is a great place to troll for great stocks that are looking to break out based on 16 different factors over the last 50 years of research that's proven. You know, this is all the same stuff that's set up when, you know, the Amazons and different ones broke out. But these are the kind of patterns you want to pay attention to. So this one's setting up very similar to Celsius did with a couplet handle, but then a tight range that came out of that. This is a sloppier pattern than that, but doesn't mean it can't lead to a breakout higher, which is what I would expect it to do. But this is almost 100% going to be predicated, in my opinion, first on the dollar breaking those levels I talked about earlier. All right, so the next request, GBP CAD, again, tight range, waiting for other stuff. Now, in this particular case, this is one of the few things in Majors land that the pound hasn't been as strong on from a daily chart perspective, right? It's because the Canadian's been stronger. If you took a look at US CAD, you can see the exact opposite. And this looks very similar to the dollar chart, DXY, in terms of its weakness related to US dollar, or the strength related to US dollar, weakness of dollar related to Canadian, I guess I should say. AD CAD daily chart, a little less, and we have a defined trend down. Okay, so you certainly can start touching a bunch of wicks with some trend down stuff and seeing this right here. Okay, it's trend down. We start to break that, it's going to be a big change. Continued strength by the Canadians globally. CAD JPY, same thing. Strength. Let's take a look at some crypto here. Okay, so it's Bitcoin. This is a daily chart of Bitcoin. Let me get the chart as big as possible here so we can take a broad look. I always like to look at, so I drew a trend line. You can always draw trend lines on these things. Make sure you try and touch the relative tips of these wicks so that it's generally catching the line in the sand, if you will. And then we broke it. We came back down to longer term lines, which were in different areas back then slightly, but came back up. I don't remember if this line had formed. I think this had already formed when we came back up towards it, if I'm mistaken. And this is, you're beginning to get hints, if you will, especially with the volume declining right here, that more than likely we're going to probably try and build, depending on how you're looking at this, head and shoulders, a right or a left shoulder, mostly the right shoulder building here. This is your first clue on this retest. Things probably not going well. We broke trend, bounced off the line. Arguably, this is pretty decent strength, but I started getting suspicious at this point and thought we'd probably see a deeper correction. Many expected us to drop back down to this line. Notice the prognosticators and all of the folks sounding the bell on YouTube, and a lot of the followers have been just ridiculously quiet the last couple of months, which I think is interesting. Well, they got their head in the sand expecting to hold on for dear life, which is absolutely no risk management. You should completely remove that word from your brain. HODL, not risk management. It's the opposite. So a lot expected us to bounce at 4,400. Didn't happen. I figured we go back down and test the previous range, which we've done. We've built a flag, and now we broke out of it, right? And if you didn't catch the news, Department of Justice and FBI, which are two divisions of Homeland Security here in the US, have figured out how to get one of the wallets from the hackers, wherever these guys are based. I think it's in Russia. Get one of the wallets, and they found a couple $1,000,000 in there, right? And a lot of people are not sure how they got into it, but there's been concern as to, hey, if this is so secure and so decentralized and so away from any kind of authoritarian or government, the ability to get in, how did they do it? And more than likely, the answer is they probably intercepted communication among the hackers that gave away the keys to get into these wallets, which would be my assumption. So at some point, that'll come out in the wash. We'll be able to figure it out. But it still doesn't lend a positive light right now. I actually heard a statistic the other day, which I thought was interesting. I can't quote the source because I forget her name, but it said that 1/3 of the use of crypto was for nefarious activities. So I actually was surprised by that stat because I figured it was a lot higher. So if you think about it, that from a crypto standpoint, 2/3 generally, and this is some big stats company that is fairly highly respected by a lot of the Coinbase venture cap and startup folks out there. So they carry a fair amount of solid data along with that statement. But I mean, I think that bodes pretty well for, the fact that 2/3 of crypto is used for regular activities globally. I mean, that's a pretty cool stat. I figured it was like 2/3 was used for, crime-based stuff, and 1/3 for transactions. So you can actually flip upside down what I thought, and it's less. So that's pretty cool. Anyway, ultimately, the goal with the question I just got is I would expect this to probably test, since this is sort of the next edge of a multi-edged cliff, right? So we get under this level, I would imagine us fairly quickly to get to the 20 area, right in this whole 22 to arguably 19 area. I will more than likely be, for the first time in over a year, I will probably be a very, very small buyer at this point. That is not investment advice. Do not step in front of any trades because I told you to. I'm just telling you what I'm doing, and it will be on a very small standpoint. Okay. Now, I could be wrong, and we could move in, to a support in this level and go back up to, some other higher level like this, which looks like the first edge of the cliff we cracked off in a neckline here at 46. So if we got back up to this area, anybody that owned this, in my opinion, in a much higher level, anything other than 46, it's maybe an opportunity to cut some of your losses smaller because you don't expect it for a period of time. So many times when you've seen this type of correction, and you can argue the degree that we're in, just essentially just say like a 50% correction. A lot of times it's gone on to much more. Could be wrong. That could be the end of that, right? That could be wrong. But oftentimes we've gone down to much deeper corrections, and then it's taken a good 6 to 7 months that it based along that period of time in order for it to rally. So I tell you that from a risk management standpoint because I hope that I will dissuade anybody from trying to catch a falling knife thinking that we're going to have some sort of V bounce. So that is the price prediction, Sean, for the question you just asked me. more swing-based price prediction because I can't really anything shorter than a swing trade-based prediction. I'm just shooting in the dark. So and there certainly is. And the problem is sifting through all the BS. There certainly is an argument in crypto land for other projects or the purchase or the seeking out of other coins or tokens and DeFi, whatever particular space you want to play in. I only just address this from the standpoint of a broad macro analysis of charts. There's all kinds of other fundamental factors that I purposely don't take into account that you can, if you wish, in finding other projects. I've had, since we actually tomorrow night, maybe I'll be able to shoot live from it. We're going to try if this comes together, but we're having our first annual wine country TP meeting. And it's going to be a crypto-based investor meeting. So I'll see if I can set up a camera and shoot some video and just hear us just rambling on and on about crypto. And I'll probably show our inexperience on the subject, but we're going to have a few people there. It's fairly big investors. This is on a large wine guy's property, is a client of mine, and it should be pretty cool. So we'll see if anything comes out of it. Maybe I can bring some knowledge to the table in terms of our TP meeting. Ethereum, kind of the same thing. That's a buy point, in my opinion, at 1847. I'll tell you, I could be completely off base on this one because from the standpoint of a lot of the DeMark stuff I've shown you guys from Bloomberg, which is really deep analysis, it argues for a price drop all the way to 790. What's called Tom DeMark indicators, which they use about 25 or 26 other factors in that analysis. A lot of it's Elliott wave. A lot of it's what's called sequential countdowns, just showing where a potential buy point is if we finish a pattern. But there's a ton of holders here that defended. And if this gives way, you can see with this big liftoff point. See if I can show you this. See this huge liftoff point right here? Very easily could visit this area back again. If in fact we do, you can certainly reassess the situation from a risk standpoint. And this seems like really far away, but this is where I would consider being a buyer. And if you guys want any requests for that Bloomberg chart, I can get it for you. There's a lot of stuff on there. It can be very confusing, but it just is a lot of this TDST sequential and 913, which you can only get on a Bloomberg subscription or through CQG, and the indicator itself is an additional $600 a month. Oftentimes, in addition to paying 2 Gs for the damn Bloomberg platform, right? Everybody's like, hey, how the hell Michael Bloomberg get so rich? Because he's been robbing Wall Street for 20 plus years in analysis software and trading platforms. But it is one of the best in terms of data sets globally. So $2,600 a month seems bananas, but not much of that big of a deal for an institution. All right, so that is everything I wanted to talk about. Let me just, for the question I got, this is my Telegram channel. Get a lot of questions about this. If you're ever wondering, you can always click on the channel and go into files, photos. I have a lot of candlestick stuff up there. Different photos of candlestick charts and understanding how the market works and so forth. And you can look up links we've shared, which is in most cases just 2 recordings. And that leads me to the last part. Doesn't seem like there's still not enough people going into AP Live and the Trading Academy to view all that stuff. And it really is a great, the vast majority, which I got to tell you, I do thank everybody in the Arrow Room because they must have heard my bitching about that. And every time somebody comes in and asks a really stupid question, in many cases, nobody will answer it. They'll just give them a link to AP Live, which may agitate the person asking the question. But in the long run, it's far better for you guys to learn how to fish by us teaching you than us just fishing for you, right? Or baiting the hook, as they say. Because I have many cases on hundreds and hundreds of students and traders that can actually be given a buy point for a particular instrument they want to trade, and they'll still find a way to screw it up in the risk management of the position. So don't be that person. Be the smart one. But that's what I want to say. Yeah, that's pretty much it. Anybody got any questions at all on anything? Other than that, I will bid everybody a safe, happy week. Get out of the house since the pandemic hopefully is lifted. Whether you want to be vaccinated or not, it's up to you. I choose no, but that's just my choice. And I wish everybody a safe week. I will see you guys on Saturday.